sure that this is all up and running nicely, because it's been a bit of a annoyance lately. Okay, but now for some reason it's not showing up on YouTube. That's annoying. Maybe it is. Let's see. Oh, there it is. Okay, cool. But still, what in the world? It says live. Oh, what did he do? All right. Doop doop doop. View your channel. Okay, there it is. I see it now. Wunderbar. I did, yeah. Oh, and thank you. Mm-hmm. Yeah, I think that's the right way to think about it. Because there's, well, I mean, I didn't mean to do that. Here we are. So, yeah, privacy is normal. That's the kind of phrase because all of a sudden, like I said in yesterday's light paper, that all of a sudden people care about privacy, which is good. But it always seems to be one of the things that gets like a secondary look. Yeah. When you're dealing with money, people, profit, I mean, sometimes principles can get in the way of that, which is, you know, normal. But yeah, I mentioned it yesterday. And I mean, this goes back to like the 14th or the 15th. And even earlier when Binance announced that they were, you know, that there were 17 tokens listed, and one of the tokens is one of the most popular on our StockTwits platform. That's Jasmy. But the other top of the list was Zcash. And because Binance has this thing where you can, you know, vote to delist. Now, ultimately, they have the final say. But, you know, when you have Ledger's CTO, one of the co-founders of Cosmos, Barry Silbert, you have, and Tyler Winklevoss from Gemini, when you have them calling out Binance for, you know, choosing to get rid of Zcash, or for even making that an opportunity to get rid of Zcash, there was ruffled a few feathers, which is, I mean, I wish they would have raised, you know, a lot of feathers when Monero was getting the boot, but at the same time, you know, what makes Zcash so different from Monero is that the privacy, the option, you have the option to shield data, all the data, or you can provide information. So from a standpoint of a business like an exchange, or, you know, for something that for compliance with regulations and, you know your customer, know your business, Zcash is superior to Monero by leaps and bounds. But crazy story, and I put this in the light paper yesterday about Zcash, which I knew about, but I had forgotten about it because it's, you know, it's been a while since it happened. But let me pull up the light paper here quick. Consequently, privacy is normal is the title of yesterday's light paper too. But one of the craziest stories of crypto is what happened with Zcash. Now, when Satoshi created the Genesis blocks, Bitcoin's blockchain was, you know, it was turned on. All right. It was up and running, and that was it. But Zcash, it's a hard fork of Bitcoin. But what makes, the thing, ZK snarks, which is a fancy term for being able to verify something without like having to provide a lot of identifying. I really struggled, and so I have a lot of people to give a very short, easy description of what zero knowledge proofs. So this is zero knowledge, succinct, non-interactive arguments of knowledge. Blah, 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 blah. What I wrote is that it's the crypto equivalent of trust me, bro, but it's a mathematically legit way to verify something without having to provide a lot of identifiable information. But Bitcoin created the Genesis blocks. The blockchain was running. Zcash, it did something different. It needed to create this privacy key, like this, and somebody from Zcash or people who know about this a lot more than me can correct me on it. But because of how Zcash works, and they wanted it to be private, is that it needed to have this essentially like this God key, this private key that gave it, these abilities to do anything it wanted to do to the network. But that's, you can't give one person that. So what do you do? So what they did is, long story short, is they had 6 people around the globe, different places, everywhere. Nobody know who each other were, where they were at. And the key was separated into 6 pieces. So it was like, they're called shards. And, person 1 got a part of the shard, person 2 got another part of the shard. And so 6 people had part of the key. Nobody had the complete key, but nobody wanted to get any part of the key either. So after it was generated, and I know there's some other parts in the middle there, but essentially after it was generated, then there were witnesses to the process too. The equipment, the drives were all destroyed. So nobody has access to those. So yeah, it was Zcash needed this key because of how it achieves its privacy. So that is what makes it very, very unique in that process. Very, very unique. Somebody said something about, why is the price down a lot? That's a good question. A lot of it probably has to do with the funding process and how, the governance part of Zcash. The ECC is the Electric Coin Company. They're the main by the way, Edward Snowden, whether you think this is good or bad, he was one of the 6. And then one of the original Bitcoin developers, Todd, he was also involved in the process. So there you go. But yeah, Zcash has a pretty cool history, and I have some Zcash. I've always felt that it's a very, very important one. I used to have a lot of Monero, but at the same time, I mean, when it started getting delisted, I started to reduce my Monero exposure to where I have just a little bit now, actually. But Zcash, to me, from a principle, it's a good balance of principles and it's something that I feel will be profitable in the future too, and appreciate over time, because I mean, it is essentially Bitcoin, because it is a hard fork of Bitcoin, but it has the feature of being private if you want it to. Also, that Zashi wallet seems to be very simple to operate as a point of sale. But anyways, I don't want to talk just about privacy. What I do want to dive into is a look at this miserable chart. So this right here. Oh wait, I don't want to save the file. Maybe it's as big as I can get it. All right. bought the XMR delisting, still mining XMR. Good morning, by the way, like the title. Well, thank you. Yes, yeah. Monero is cool in that I believe it is the only cryptocurrency that has had a bounty put on it by the IRS to try and crack its code, how it achieves its anonymity. There was I just read this. I wrote about it in our news, but yeah, there was a new research reveals the timing of Monero spending patterns as probabilistic. Research could be used to improve Monero user privacy in the future. In a nutshell, they found something that could be an issue in the future, and they're working on the fix. So that's Monero. It's the only cryptocurrency as far as I'm concerned. Yeah. I mean, ultimately, in a Monero is, from a principles standpoint in crypto, it's the gold standard. Bitcoin is not private. It's kind of public ledger. The word public means, like when anybody can see what's going on. But there's a lot of identifiable information. So that's how that goes. But what I wanted to talk, because a lot of people, I had some questions, emails from the light paper and yesterday about, the state of the market, which, we looked at this yesterday. Is April, the month of April is, so if you rate over the last 10 years, if you rate months by, their performance as far as when months close in the green, May is the best performing month. If it closes in the green, May is the best performing month on average. April is like number 6. And when things close in the red, out of all the months averaged out for the last 10 years, it's ranked number 5. So, I mean, it's in the middle of the pack as far as how good it does and how bad it does. Overall, though, its average performance is, I think, the 3rd best on average. But at the same time, it's not a huge, average winner. May is the biggest, and that's kind of a constant in a lot of in spring, the spring rally. That's a thing that does. That's why you have, like, in the stock market, you have like the spring rally, and then June is followed by the June swoon. So yeah, that's what's going on there. But if you want to look at, an idea of what the market is doing from an on-chain analytics perspective, you have, what we're looking at is Ethereum's SOPR, which is its spent output profit ratio. So what we're basically doing is we're looking at, there's that line there, that black line in the middle, that the one line. Essentially, if it's above the one line, that means people are selling their Ethereum at a profit. If it's below 1, it means they're selling it at a loss. And ever since February 23rd, the selling of Ethereum has been at a loss. And and just recently, if we go back to the 9th, that is the lowest value it's been at since September of 2023. And this is one of those situations where you look at, fundamentally, and I'm not a huge fundamentals person, but I know a lot of people are, but fundamentally, the market has never been more bullish. I mean, you have a pro crypto president. You have a very aggressive pro crypto cabinet, and deputy administrators. I mean, it's as good as it's ever been from a regulatory perspective. But when you start to involve, if this was 2016, 2017, 2018, 2019, I think we would see Ethereum and everything else in no man's land. But when you attach traditional money, I mean, ever since Ethereum started and the broader crypto market has become more involved in traditional finance, or rather traditional finance has become more involved in it, it starts to fall into the same risk controls that other assets are. So Ethereum, and like crypto, is the most risk-on of risk-on assets currently. And when there's a lot of uncertainty, the big money entities de-risk. That's just the nature of the beast. But in a nutshell, the entire altcoin market, actually, the whole altcoin market is a lot healthier than Ethereum. Ethereum is like the ugliest of the ugly. I mean, it is performing so poorly, that's layer twos are destroying it. But anyways, yeah, that's to answer that question from Bryce yesterday. But let's take a look at what's going on here. So I want to take a look at Cardano. Starting out, this is something that is a fairly consistent kind of setup that you're looking at in the crypto market right now. Some form of this going on. Some form of a head and shoulders pattern at the bottom, which is this is a standard looking pattern. There's a lot of, in Thomas Bulkowski's work, he writes a lot about head and shoulders patterns, and he has a book called unimaginatively the Encyclopedia of Chart Patterns by Thomas Bulkowski. He also has a website where things are kept up, but most of his stuff is done in equity markets, so it's more applicable to crypto. When I would teach a lot with forex and trade a lot of forex and do a lot of live streams with foreign currencies, the behavior of the patterns is definitely a lot different on average. But you're dealing with foreign currencies are a range bound market, whereas things like stocks and crypto are, they're trending markets. All right. Let's see here. What has been a fairly interesting, kind of move lately is if you look on higher time frames, you'll see that the altcoin or total three. So TradingView has three market caps for crypto. There's total, which is the entire crypto market, it's market cap. Then you have total 2, which is the altcoin market. And then you have total 3, which is the altcoin market excluding Ethereum. And last quarter and for the last few months, the total 3, or the altcoin market excluding Ethereum, has been outperforming the altcoin market with Ethereum. So Ethereum has been the weight on the altcoin market. But looking at the overall altcoin market and how it's doing, daily chart, it's continuing to position in a likely bounce here. I mean, this is really, if we go right here, I mean, this is the altcoin market cap chart. We go out like on the weekly. I mean, this is a pretty standard looking drive down. And if you're somebody who's viewing this as an Elliott wave. There's a lot of people who are looking at this as like one of the inside waves. The first corrective wave is often the deepest. And this is definitely the case that we're seeing here. I'd say but it is what it is. Just a very strong drive down. Yes, I can. Put this back to here. Let's see, Ripple. You want me to look at Ripple? There we go. That's not what I wanted to do. That's not what I wanted to do either. XRP. I mean, it's really the same. This is about as symmetrical as you could get for a head and shoulders pattern. By the way, I know some people look at, the candlestick charts and they get a little, especially with crypto, they get a little weirded out by the wicks. Depending on the exchange, the wicks can be extreme. This is a market where I often will, just to see things a little bit clearer, I will turn off the wicks because things tend to clear up a little bit. Especially if you're looking at this, like there's a very clear, defined channel here. Which, if you're looking at the wicks, actually, after you see this, it's probably hard not to see it even with the wicks. But with the wicks, it makes it a little less noticeable. But here's you have that inverse head and shoulders pattern that is developing on XRP's daily chart. From an Ichimoku perspective, right over here over the next, let's see, next 1, 2, 3, 4, over the next 4 days. So going into Monday, you have a very thin cloud right here, and there's 2 Kumo twists, which are these events right here. It's where, let me make these a little darker, or thicker rather. And Kumo twists are basically when the cloud changes color, when span A moves above span B or below span B. What's interesting about the Kumo twists within the Ichimoku system is that they are often big warning signs to changes in direction. If something is trending heavily into a Kumo twist, trending very strongly up or down, there's a very high probability that it gets halted. Not saying that move terminates entirely, but very likely you'll see some type of pause or pullback, throwback move around that time. It's been my experience when you see this kind of chop and things are flattening out. This is typically a thing that you start to see price action accelerate in one direction. But why it matters, because this area is thin, is the cloud is a very big source of resistance, and especially Senko span B, which is the red line. That is the strongest level of support and resistance within the Ichimoku system. I mean, it gets, if it on any time frame, especially higher time frames, and that's true for all things, but it is a very, very tough level to move beyond and to stay beyond it. So it's hard for prices to move from below it to stay above it. But when the cloud is thin like it is here, this isn't a sign of strength. It's a sign of weakness. It's like Senko span A and B, the closer they get, the weaker span B becomes. So if XRP, for whatever reason, over the next 4 days starts to move higher and it ends up bursting above 244, has a couple daily closes above it, then that is a very, very, very strong sign that we're likely to see it continue moving higher. But we've been below the cloud now for, with the exception of this bump here, really ever since the 18th of February. And yeah, I mean, until Ichimoku makes things very easy to interpret. If it's below the cloud, it's naturally bearish. If it's above it, it's naturally bullish. And like I've said before with the Ichimoku system, it's a trend following system. It's not a system. I mean, if you think of it like a meal, you are going to miss the all you can eat breadsticks and soup and salad. And you're not going to get your cheesecake as dessert, but you will get the garlic mashed potatoes and your medium rare prime rib. So you will get that, but you won't get the breadsticks or the chocolate cake, which I'm fine with. I do lessons on this. I haven't done one in a while, but I will definitely going to start doing that again here in the near future. But that's for Ripple. Let's see if we look at it on its weekly chart. Ripple in this case or XRP is light years ahead of everybody else on its weekly chart. But if you want to know where, and this is really the case for a lot of the crypto market in general, I mentioned this yesterday and on Monday, is that it's likely that we have to wait until the 28th of April before we start to see, on or around that date, before we start to see any very clear signs that the market's about to explode higher. But time cycle wise, that is definitely the case. Yeah, I can look at Litecoin. Man, Litecoin is just beaten down. I mean, this is Litecoin has one of the ugliest looking monthly charts out there, which is weird because Litecoin accounts for a ginormous percentage of transactions that are on all blockchains that are like spent on like real world things like food items, different purchases. I mean, there's really not a lot of other cryptocurrencies out there that can claim to have as much daily use adoption as Litecoin. I know that sounds weird, but Litecoin's network activity is like light years ahead of almost everybody else. And I'm not counting. I mean, yeah, blockchain activity is important, but what kind of activity is happening? I mean, some people say like, oh, look at Solana's activity, la da 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 da. Yeah, but that's all like with shit coins and all that stuff. I mean, that's speculative activity. But as far as like real world use case and adoption for normal daily use, Litecoin is it's one of the big leaders, and for that it's a success story. And Litecoin, it has a very ugly monthly chart. It's very bear flagging, and it hasn't had a lot of the same boom that everything else has. I mean, ever since the collapse of Luna, followed by FTX, I mean, its recovery has been kind of nah. I mean, it has not been a fun thing to speculate on or hodl very much. So yeah, Litecoin. And I mean, ultimately, this really looks like kind of like an extended bear flag, to be honest. Doesn't look that healthy, but fundamentals, you'd be hard pressed to find something that is not as that is something better than Litecoin. Well, I'm making sure that chat. I want to make sure that. Oh, you know what? I just realized that I selected nothing in chat. So my bad. For X, that is. Yeah, sorry about that. Picking me messages, but yeah, sorry. I'll change that tomorrow. So, anyways, yeah, that was like ChainLink. I mean, ChainLink's another one that is really ChainLink's partners that it's been working with in the traditional finance space, like Swift. I mean, this is a juggernaut of use. I mean, it's ChainLink's oracles are used by metric crap ton of entities. I mean, if these were stocks, things like Litecoin, ChainLink, Avalanche, Immutable, they are things that have so many positive fundamental things going on that, you know, that price and the price action does not reflect its fundamentals. But that's a great thing about technical analysis, is that we don't have to worry about those things, and we're really only worried about the price action itself. Speaking of AVAX, wow, that's actually crazy to think. Like, it's had 4 straight months lower. By the way, Ethereum, the longest stretch of months that Ethereum has had, you know, down, the longest consecutive stretch of losses is back here in 2018. Between, you had May through November of 2018, 1, 2, 3, 4, 5, 6, 7, 7 straight months in the red. The second highest is 3 months. That was in April through June of 2022. And then again in June of 2024 through August of 2024. We broke that record with March's close. So Ethereum has had 4 straight months of monthly closes below their open. And unless something changes over the next, 13 days, is it 13 days or 14 days? 13 days. This is going to be the 5th month in the red in a row. It's because it's already the second longest stretch. So if it feels like, if you're an Ethereum bull, if it feels like the last few months have sucked, it's because it has. It's been a long drive south. I wrote an article about this too, because this is crypto for you. It plays with your emotions. I mean, look over here. November 20, you had a 47% drive up. That's great. And that really only occurred over a few days, a week or two. So you were in misery for at least 5.5 to 6 months. And then you only got to experience, a couple of weeks of joy before you suffered the slow, torturous bleed south again. So, I mean, this market is very, very brutal, and you know the worst bear markets in crypto are really kind of measured, have lately been measured by the emotional pain, not the depth or the scope of the depth of the wipe. It's more about the kind of aggregate emotional horror that people are going through, which is significant. And it almost makes it a little bit more painful because you look at Bitcoin and it has just really done way better than everybody else. I mean, Bitcoin's dominance. I mean, this is a chart that no altcoin lover wants to look at, but Bitcoin's dominance, when it closed in March, it closed at a, what is that? 4-year high. And really, ever since September of 2022, Bitcoin has just continued to take more and more and more of the entire cryptocurrency's market dominance, and where it's at 64% right now. Back in February, it got to a high of 64.34. This is a clear sign of two things. New money coming into the market is only going into Bitcoin, and existing money has rotated out and is parked in Bitcoin. So you don't have a lot of speculative money moving into altcoins as much as you used to. And that's not a big surprise, but I mean, when you look at the world's second highest market cap crypto, Ethereum, and you look at the SOPR, compare it to Bitcoin's here. So here, the Ethereum, its spent output profit ratio, it's been below 1 since the 24th of February, meaning that people who have been selling at a loss for almost 2 straight months. But you compare that to Bitcoin, and you have a totally different scenario. There's been some selling at a loss, but almost non-exact. I mean, very, very, very marginal, almost negligible. It's been sitting pretty steady at 1. But even like some of the other altcoins don't look as bad as Ethereum's. Like if we look at XRP, XRP, I don't know why they don't keep this color consistent, but it doesn't look, it looks more like Bitcoin's than it does Ethereum's. What does Doge's look like? All right, Dogecoin's looks more like Ethereum's, but also not as bad, except for right now. So the spent output profit ratio on Dogecoin is kind of ugly, but still looks a little better than Ethereum's. And then we can look at another on-chain analytics sentiment. And let's look at like the MVRV ratio for Bitcoin. And let's look at like the 90-day. Yeah, so the MVRV ratio, what is their definition of it? Essentially, MVRV ratio, you can think of it almost like an overbought or oversold indicator. It's not. It's basically telling us that if it's below 0, that means these are levels where people are looking at, where like buying is attractive. All right. So the lower it goes, the more attractive buying is. When you look at, let's see here. Yeah, look at sentiments. Sorry, I had it pulled up on the wrong screen. Market value to realized value. We're basically looking at the number of coins purchased over the last period, which here we have 90 days. And yeah, Bitcoin is sitting down here in the doldrums. And from this perspective, it looks very attractive. When things stayed down here for a long time, it tells us two things. One, the buying is still the more attractive option. Number two, nobody's convinced that it is an attractive option. There's not a lot of people that are believing that is the case. That's Bitcoins. What does Ethereum's look like, I wonder? 90-day MVRV. Oof. Well, there you go. I mean, it looked attractive in January. It looked attractive again in February. It looked attractive in March, but nobody is really, man, negative 20. That has got to be like, and then this has got to be a crazy, crazy low. Holy shnikes. See, how far back are we? We're at February of 2023. How bad is that? All right, we'd have to get into Luna collapse territory. Is the last time it was this bad. And wow, yeah, that's pretty crazy. I think I know something I'm going to put in the light paper today. That is really shitty. Wow. That's very nutty. Bitcoins is not that bad. Bitcoins is, well, actually, I mean, back in March, the MVRV ratio for Bitcoin was the lowest it's been since FTX's collapse. So, by the way, chart patterns like head and shoulders patterns, they apply to pretty much any chart. So there's one here. And there's currently one here. Man, that is, I mean, let's see, wonder if we can get the MVRV ratio for something like XRP. Yep, let's look at the 90-day. Whole hell of a lot healthier than even Bitcoin or Ethereum's, which basically is saying that out of the three, the highest, the best reward for the risk is Ethereum and then Bitcoin. Well, wait a minute. Yeah, Ethereum, then Bitcoin, then XRP. What about like Dogecoin? Just kind of looking at some. Let's see here. What about Solana? This, yeah, I'm not surprised we can't get the MVRV for that because it's such a shady network. Cardano. $90-day. Yeah, I mean, that's still, I mean, these are same. You have to go back to Luna territory the last time it was this low, but it's definitely, ooh, that is interesting. There is a definite both XRP and Cardano, there is a definite uptick. Yeah, this is matching up nicely when we were looking at the Ichimoku system and the Kumo twists, and then on the weekly Ichimoku where you see Senko span A and B both pointing in the same direction. I mean, this is all pointing to early short-term accumulation before a bullish breakout. Not saying that that's going to happen, but what I am saying is that there's a very, very high probability of it, and the combination of your technical chart analysis and on-chain analytics is really supporting that right now. XLM, let's see what. Do we not have an MVRV for this? For Stellar, what about Polkadot? Polkadot is kind of like Zcash in that, you know, a lot of the price pressure is due to governance issues, I would say. What about, I don't know if Sui, if we have access to Sui's MVRV on here. No. But yeah, the on-chain analytics here are pretty interesting for. Yeah, these are very, very dramatic. Also, I want to look at liquidations, what's going on here. All right, I know it says that the longs over the last 24 hours are this will probably switch. We should probably start seeing shorts getting hammered over the next 3-4 days. If the current short-term trend that we see on the on the charts themselves and with on-chain analytics, there's definite, and especially with the weekend coming up, there is a very strong case for shorts getting hit massively. Although that's that has happened a lot already. Mantra. Oh yeah. Mantra. Yeah, I put in the light paper yesterday, but also they had a, that is not the Mantra that I'm talking about. I thought I had the light paper pulled up. You know what? Let me just pull it up here. Mantra. There it is. Full version right there. So they did come out yesterday with a kind of a breakdown. And what I had written is basically that they don't know what happened, but they are getting together transparent data showing that insiders did not participate in the drop. They are also asking that other exchanges provide them with data to help determine how, why, and who, what happened. And then also the CEO has committed to burn his supply, I believe. And they're also talking about burning more of the tokens. Now, this burning concept, I mean, Stellar did this back in 2017 or 2018, where they got rid of like 50% of the supply of their tokens. And economics 101, if that was the limit of your economics knowledge, you know, cutting the supply of something does not automatically mean that the price goes up. that only happens if demand remains the same. If demand remains the same and the supply is cut, the price goes up. But if demand is not there to begin with, cutting the supply doesn't make prices go up. So I would anticipate them doing something like buybacks to pump prices, and then all of a sudden come out with a thing saying, by the way, we're burning all this, we're cutting the supply. I mean, burning has always been, in crypto, burning has always been a way to, try and give hodlers or speculators and investors the idea that, that because the supply is decreasing, the price is going to appreciate. And that's not always the case. It's mostly a smoke and mirrors thing. So, that is just kind of how things work. But anyways, I've got to bounce here. Fun talking with you all again, and I will see you maybe tomorrow. We'll see. It is Good Friday tomorrow, right? Yeah. But yeah, have a good rest of your day, and thanks for watching.